Hey, good afternoon. This is David Blake with the Tuesday Tech Talk for Tuesday, April 3rd. We're going to quickly review the last couple of days in the market, try to figure out what we may be looking at here over the next couple of days. We'll start out with the weekly market letter. And as you can see on this thing, we're still have a market posture that's bearish. CTI slipped a point down to -8. That's we're expected to remain negative for a few more weeks. Momentum as a neutral +2. That's unchanged from the previous week, and that shows that the broader market is outperforming the Dow. Sentiment is also neutral. It's at a +1. That shows that some of the bullishness that we've had over the last few months has tapered a little bit as we've suffered this market correction. And as of the close yesterday, we were still in correction territory. The technical conditions of the different indexes remain weak. We still have only the consumer discretionary sector that's trading above its 100-day moving average, while 6 sectors remain below their 200-day moving average. We're having a hard time getting any kind of follow-through. As last month, the Dow only had three time periods where we actually had back-to-back up days in it. So we're not getting any kind of follow-through in this market at all. Now, below the summary and all in the market letter, we have this calendar of technical events. As you can see, everything that's happened since February has been bearish. Now, if you'll take a look at these things once in a while, and you can get this updated daily when you pull up the DIA for the diamonds ETF or the SPY for the SPYs. And once you'll start to see these things flip over to bullish, then you can say that the market's trying to put a bottom in. But until you start to see some of these things, maybe it's stocks oversold or it's crossed, stochastic bullish turnaround or something like that. We haven't put a bottom in yet. So the market's still trying to do that. Go a little lower on this thing. You're going to see some numbers to watch, and of course, if you want to see what we talk about and what we look at to get these numbers on the momentum and sentiment index, we have all these numbers, what's bullish, bearish, positive, and negative at the bottom of the page. Okay, let's take a look right now at the market at a glance. Okay, if you go back to the home page over here, go to market recap, and it'll give you a quick picture of all the different indexes. But what I want to take a look at first is how the internal breadth for the broader market's doing. Over here, first we'll take a look at the NYSE Advanced Decline line. We update this for you every day. Not quite as bad as I would have thought. We did get a pullback yesterday, but this thing, we're not making lower lows. So if anything, I can almost say that this is the AD line on the NYSE is showing some positive divergence. Not a lot, but it is there. Okay, for the NASDAQ AD line, you can also see that we haven't taken out the new lows. Of course, we haven't taken out the new lows on the index either, but this is a little bit weaker than the NYSE. So let's keep an eye on that. If it takes out these bottoms, and if this NYSE piece breaks below that, that would be bearish for the market. In addition, we like to look at what the new 52-week highs and new 52-week lows are doing. As you can see, we've had several weeks now where the new lows have outpaced the new highs. We're not seeing an expansion currently, which is nice. If we start to see this move higher, like back here in February, that would probably be would probably signal that we're off for another down leg further from here. In fact, I would expect as we look at these charts next on some of the major indexes, you can see where some of the support levels are going to end up being. So let's take a look at the Dow Jones first index. Come over here and put in DJ-30. That'll give you the actual Dow Jones chart on the index rather than just the ETF. Okay, what we have over here, we still have very weak indicators. We're down here below the 40 level on the 14-day RSI. Anytime this thing breaks below 40, it's a sign that the bears are actually more in control, and we probably have more downside. Now, we are kind of holding up here around 38, 39, but if we can see this thing break down here at this 30 level, it's going to probably point to some lower prices. We also have the MACD, and I have a longer term MACD in here, which is more for an intermediate term trend indicator for the market. You can see this has been working its way down since February. and we're still bearish, showing a bearish trend on that. We have this on the upside. We're going to run into resistance up here at this descending trend line for the Dow Jones. And as you can see, so far we're finding support down here around the 200-day moving average, which we want to watch that, because the next chart we can look at is the S&P 500, and that actually closed below that support line, which caught the eye of a lot of traders on that. So let's pull the S&P 500 up. That's going to be SP.500. Okay, going over here, you can see right here we actually broke the 200-day moving average and closed below that level, which is the first time since before the election back in 2016. Again, we have the bearish trend on the MACD down here, and we have the 14-day RSI starting to drift below 40. Both of those are pointing that we still have some potential downside to go on those. Okay, next we want to take a look at the NASDAQ. COMPQ, we'll get you to that. Okay, we're a little bit better off on here. We had this, after this pullback in February, we did break out to a new high. That positive divergence against what the other indexes were doing is what caused us, like we talked about last week, to reset the CTI to its original count. And then once we made a new low on the Dow Jones, of course we had to reset it, and we came back up with the original count. So that's why we're still bearish, and we're going to stay bearish on that on the CTI for a few more weeks. The NASDAQ is a little bit better shape, surprisingly, because these big cap tech names and FANG stocks have been getting crushed here lately. But this is showing that it still is outperforming the broader indexes. As long as this stays above the 200-day moving average, we're in good shape. I would expect to see this probably come down at least to test it, and maybe go a little bit lower than that. We're not looking at anything more than maybe, if we do break below this 50-day moving average again this week, I would say we're probably looking at another 5% to the downside. That would put us somewhere between 2,500 and maybe 2,550 on the S&P 500, and probably around 20, maybe 23.5 or so, I think, on the let's see, on the Dow Jones. Okay, let's take a look at a couple of the industry groups that have see where we might want to go with some money, or look at what might be happening here on pullbacks. Now, normally we would click on relative strength, and we would see what's been bullish and bearish over the last 50 days. In this case, I want to move over here and show you that if you shorten that time horizon, and we go back to about the last month, which will include just all of March here, you'll see that we have very few sectors that even over the last 4 weeks are industry groups that are even positive. We have precious metals, that's showing you're getting some move into gold and some of the silver, that type of thing. But now you're also seeing electric utilities, water utilities. You can go over here and you'll get a list of different stocks that you may want to look at. Click on the industry, and you can find a group of stocks that you can look at over here. Over here we have Cons Water and Connecticut Water Services. There may be stocks that you could put some money if you're thinking that the market's going to trade lower, or that interest rates aren't going to continue to move higher. Now, the problem with utilities in here right now is that we have, if we start to get some stronger economic data once President Trump quits his tweeting, then you'll start to see the rates move up again on the 10-year. And right now we've been, even despite the rate hike last week to 2.95, we're only at about 2.77 today, but it did fall down as low as 2.74. That's why you're seeing this these gains and a little bit of improving conditions in the utilities. Okay, next we want to take a look at the ETFs, and this will also tell you, especially like you can use this with your mutual funds also. And we want to take a look at the last 1 week, where the fast money has been going. Again, not much to the upside. We have commodities, precious metals, which tells you that we've seen the money going into some of the more interest sensitive or defensive sectors, including gold. We talked about gold a little bit, where we've had several runs to the 1360 area on gold, and we've bumped into that area probably 3 or 4 times in the last 3 or 4 months. So we're keeping an eye on that. If that breaks above that 1360 level, we're going to have either a triple or quadruple point and figure breakout in gold, and that would probably indicate that we could be getting that extra 5 or 6% downside in the market. Okay, put over the last 1 week and also 4 weeks, you're going to see the small caps have been hurt. But look over here. Also, we have technology, healthcare, and financial. Those are three sectors that if you're in a healthy market, and the small cap stocks, those are the sectors that you want to see leading the market when you're in a healthy market. And we're down anywhere from 14 to 10, 11% on some of those. So again, the wrong sectors are pulling back in here, not showing the strength. They're selling off the most, and that's kind of hinting to us that we're probably going to have a little bit more downside. I think we'll bounce around this 200-day moving average going forward here, but once we snap that with a little bit of momentum behind it, that would probably signal the next 5% down move. Okay, we're going to go back to the home page. We put up a couple stocks for you to take a look at. Last week we have we'll take a look at Salesforce in here. Now, one thing about this, it's had a good chart, good run for the last year or so, but it's part of the tech sell-off that we've had for the last couple of weeks. So we're starting to see some deterioration, even though we're long the stock right now. What we do each week, we pick out 3 stocks that were in Barron's or in some kind of news that we had an upgrade or downgrade by a major wirehouse. We give you a little bit of the fundamental picture. We talk about the second opinion report. In this case, we upgraded Salesforce last August. We've been long the stock now for eight months or so. We have about a 26% gain in the stock, or we did have up through last week. Take a look at the different indicators down here. We make the comments. We'll take a look at the chart. It kind of lets you read of these things just to see what we look at when we look at some of these stocks for evaluation. And over here you can see where the tech wreck has started over here. Salesforce is caught up in it. Their earnings and revenues are going strong. However, it can't escape the tech wreck that we're in right now. It's come down to the 50-day. We want to keep an eye on that. If it breaks below 116, you could be coming down here for a test of the 100-day moving average, which I'm not sure where it is, but we'll take a look at that. Maybe in this February lows, somewhere in that area would be where we would find support. And below that, again, we talk a little bit about we give you a little bit of a summary. In this case, we're near the sell stop at 118, and it did break below that, so that's a red flag. And also, when we talked about the technical events, remember I told you that once you see these things start, if you're all bullish and you start to flip over to bearish, that's usually a sign that the trend if you're in a bullish trend, that you're starting to roll over. If you see all bearish and you start to see the bulls start to flip over here, you've probably put in a bottom, and that's going to show you that the market is starting to change direction a little bit. And we'd like to see this on the different indicators, for the S&P 500 and the Dow and the NASDAQ, but we don't see any of those coming up yet. So until we start to see some of the technical events flip over to bullish, it's likely that we're going to have continued weakness in the broader market. All right, that's going to do it for this week. If you have some questions, please go ahead and email them in, and we'll see if we can get to them next week. All right, have a good week.